We got some great news for AMD stock investors as the CEO, Lisa Su, held an investor conference where she revealed critical insights that pleased stock market investors. AMD stock is up over 8% on Wednesday following those announcements the CEO made. So in this video, I'll review those announcements and what it could mean for AMD stock investors.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So one of the big things that came out of that investor conference was that AMD said it expects to see its data center revenue increase 60% over the next 3 to 5 years, up from $16 billion in 2025. The company is gaining market share in the data center segments optimized for artificial intelligence, a category that NVIDIA has dominated significantly in recent years, with an estimated market share around 90%. The outlook came after AMD CEO Lisa Su said the company sees the total addressable market for AI data centers increasing to $1 trillion over the next 5 years. $1 trillion over the next 5 years. And that goes along the lines of other estimates I've seen from other providers of these estimates, with suggestions that it could surpass 1.5 trillion by 2035 and then growing further by 2040. The big driver for these increases is that accelerated computing, or these data centers optimized for AI, provide a lower total cost of ownership than traditional previous generation data centers that were based on CPUs. So it's not just that these new data centers are creating the possibility of further improvement in artificial intelligence, but they're also lowering the total cost of ownership of things that companies were doing previously. So imagine companies like Netflix or YouTube with their recommender systems, or just the computing required to serve all of that data, all of that content, right? All of that was traditionally being done on data centers that were based primarily on CPUs, and nearly all of those data centers are now being upgraded to become based on GPUs, on accelerated computing, because it just offers a lower total cost of ownership. It's just so much better than the previous generation, both on performance and cost. And so it's become a no-brainer for these companies that are providing that computing to upgrade to the latest and greatest, because it provides so much improvement. So according to the CFO, the company's overall revenue will jump 35% over the next 5 years, from 34 billion in 2025, and the majority of that revenue will come from AMD's data center business. And that's a more attractive segment for AMD to generate revenue. Remember, not all revenue is created equal. Some revenue is better than others because some revenue provides better profit margins, better competitive advantages than other segments. And the data center segment optimized for AI is an incredibly lucrative segment if you just look at the margins that AMD is forecasting, and then you compare that with the margins that NVIDIA is already delivering. Remember, NVIDIA generates gross profit margins around 75% for its products, and operating profit margins around 60%. Very lucrative, well above the operating profit margins that AMD has generated over the previous decade. So you can see that here from 2015 to 2025, AMD has never generated an operating profit margin over 22.2%. That's the highest it's ever generated over the previous decade. So the combination of all the markets it served generated this kind of a margin. So those markets were not as lucrative as the data center optimized for AI market, where NVIDIA has generated operating margins around 60% for the last few years. So it's a much more lucrative segment, and investors are cheering this news because now you're getting a business that's going to be weighted more towards that data center market. Of course, AMD still generates revenue from gaming, semi-custom chips like the ones that go into the Sony PlayStation 5 and the Microsoft Xbox, and it's still generating revenue from its CPUs that go into desktop computers and personal computers, etc. But as the business grows over these next few years, More of that growth is expected to come from that data center segment, which generates higher profit margins, which could lift the overall profit margin profile for AMD. The CFO goes on to forecast that AMD's gross profit margins will be between 55 and 58% over the next 3 to 5 years, while its operating margins will be more than 35% during that same period. And that's a big development, a big positive development, and maybe the biggest reason why the stock price is up 8% following the news is because of the margin profile. Everyone understands that AMD's revenue will grow over these next few years as a result of increasing demand and as a result of the large hyperscalers giving AMD an opportunity to become that alternative to NVIDIA, just so that NVIDIA doesn't grow to dominate this market too exclusively while negotiating power stands in the hands of NVIDIA, and hyperscalers don't like that. So they're going to give AMD an opportunity. I think we all kind of knew that. But the fact that they're going to be able to generate 35% operating margins company-wide, that's a new development, and that's a big positive because, as I shared with you, the company has never generated an operating profit margin anywhere near 35% in the previous decade. 22.2 was the highest, and that was a result of all of the positive circumstances surrounding the pandemic for a company like AMD that's working in the electronics industry that was absolutely booming as people were staying home and they couldn't spend money on travel or eating out or going to concerts. And so they spent more money on electronics, and that was great news for AMD. Its gaming segment, its computing segment all benefited significantly as a result. So now the management team expects that its margins are going to be higher than ever before, while its revenue is soaring more than it's grown in previous years. Now, all that being said, I feel these positive prospects are mostly reflected in AMD's stock price valuation. It's trading at a forward price to earnings of 46 compared to the forward price to earnings of NVIDIA at 33. So AMD stock right now is trading at a valuation that's roughly 33% more expensive than NVIDIA when measuring on a forward price to earnings basis. Furthermore, when I calculate the company's fair value using my proprietary discounted cash flow valuation model, the current market price at $237 is above the intrinsic value per share I calculated at $193. So regardless of the valuation metric I'm using, AMD stock looks either fairly valued or slightly overvalued given its current market prospects. So I don't see this as an opportunity for investors to make a great return on investment. I can understand if you already own the stock, it's a reasonable stock to hold because it's got great prospects both in the near term and the medium term and the longer term, as I think it will continue to grow to gain more market share in this industry. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.